Well, folks, it has been a little while since we've done one of these because I've been traveling. I was on the East Coast, I was in New York, I was in Las Vegas, I was in San Diego, and I think Mark actually had a well deserved vacation in the midst of all of that. So it's been a little while since we held office hours. That's what we're going to be doing today on Open Interest. Hello, everybody, and welcome. I'm Mike Coe. Welcome to Office Hours on Open Interest, and welcome, Professor Mark Guthner. I can see you are in your office at Rutgers University. It looks like
Yeah,
so. No rest for the weary during summer. Are you teaching summer school as well?
no,
You have a summer slate of
I
classes.
do not have summer school. I've redesigning some of my classes just to make them better and keeping them current. I always like to pull some things that are happening in the world and make them part of the class. So you get something that's practical happening in real time, and then how do you think about it? Um, from a theoretical standpoint, and then try to figure out the best way to proceed. So that's what I've been doing this summer. And although we did have a little time off, my real time is coming in October, or I'm sorry, August 9 to 12. We're gonna go out to the West Coast and actually have the first real vacation I've had in maybe 10 years. Can't believe how
Well,
long it's been since I've actually had a vacation that wasn't just like a 2-day getaway.
well, when you get out here, I mean, I'm in Northern California, and I know you're a Southern California guy. So hopefully, somehow we can figure out a way that we can see one another while you're out here. I will say this: I was in, as I just alluded to earlier, Southern California last week. I was
Hmm.
in San Luis Obispo, I was in Santa Barbara, I was in Los Angeles, and I was in San Diego.
Nice.
And while I was in Los Angeles, I was at USC because I was with our older son. We were touring the campus. And what I did not know at the time, and I wish I had, was that Tesla had just opened up this new diner, or they are opening up this
Oh,
new
I
diner. But
saw
we could have
that.
driven by that. It was like 2.5, 3 miles away, I think, from the USC campus. It's very close. Certainly, given how much traveling I was doing, it would have been no big deal for me to head over there. I was not driving my wife's Tesla at the time, but that would have been convenient to go get a tasty burger and fries and hook up to a supercharger. And it looks like they have an outdoor movie screen, which probably wouldn't be running during uh, a July summer day in Los Angeles, but who knows? With with you bringing in sort of current events to talk to your class and talking about the theory, I think it makes a lot of sense then for us to talk a little bit about some of the changes that we're seeing in the regulatory landscape that have important implications. With the new administration, not least of which is sort of the regulatory framework that's shaping up around cryptocurrency, around the blockchain, around Bitcoin and Bitcoin Treasury, its adoption by many firms that didn't seem that willing to tackle it. What are your thoughts on this now? What are you looking at?
Well, I think this is really good stuff. It's a real change in attitude, and I don't know if we needed to go through sort of the harshness and the of what took place. The SEC was kind of not being and I changed my opinion on this. I thought they were doing the right thing at first, and then I changed my opinion, and I thought that they were not being good actors in this process because they would invite companies in to talk about the issues, and the companies would talk about what they're doing and how they're raising money and issuing tokens and all that other kind of stuff. Speak for a couple of days, and then they get back to the office only to find a Wells notice um, in their inbox. And it's like, what's that all about? You're coming in good faith to talk. And then the SEC was going like, well, why won't anybody come talk to us? It's like, well, duh. So it was nice to see a couple of things. One is this Genius Act is very good because moving money around to pay your bills. is expensive and time consuming. If you wanted to send some money overseas, you take 2 or 3 days for that to settle. Let's say you had relatives overseas, or you want to do it, you're somebody working in the States and you're remitting some money back to your relatives. Or if you're a company just doing a lot of business, and you want things to settle, in a few hours instead of a few days, stable coins are going to be a good way to do that. We were talking about earlier, when I thought this would be a good subject to talk about, is how this is going to change the payments network. We're all used to carrying credit cards, and typical credit card charge to the vendors 2 or 3% of a transaction value, and that's why we often get cash back, right? It's essentially the credit card company is taking some money from the vendor and giving it to the cardholder. And I'm sure there are some vendors that would rather have that 2 or 3%. Particularly when you think about, there's a lot of businesses whose profit margin is like 5%. Grocery store, for example. You all of a sudden you can get an extra 2%. I mean, you've just massively increased your profitability. So I think there will be some products that help people pay their bills, and do so at a lower cost. And I could hurt Visa and MasterCard potentially, or they might get in the game and use these rails to provide an alternative.
It's interesting that I'm really glad you brought up an industry specific example with groceries, because to your point, the margins for Albertsons, for Kroger, this is not as true for Walmart, which is the world's largest grocery store. They have slightly larger margins than those first two, and Costco has slightly larger margins than Walmart does. But as we have migrated, when I was a kid, people paid for their groceries with cash, with checks,
Yes.
Was very common, and oftentimes with incentive programs that the grocers themselves had. So they used to give you these stamp books. I think they were called green stamps or something like that, or at the A&P where my mom used to shop. And I can remember that, you would accumulate these stamps and then you could use them for stuff. And so that essentially was, so the incentive program where people who are repeat customers, that concept has been around for quite a long time. But when you consider that the payment processors in the form of Visa, MasterCard, and American Express in particular, which for a long time had even slightly higher fees, that their fees might be as large as the profit margin for the business operator where the consumer was making their purchase.
Yep.
You're quite right. This is really significant. But the other reason I really liked you bringing up groceries is that, and this was a point that our producer Jay was making before we went live, is that conventional payment processors do add material value in many contexts for both the buyer and the seller. So there are certain protective, guardrails, if we'll call them that are available. So, for example, consumers can dispute charges. Some credit cards are more accommodating than that. You mentioned that your wife carries an American Express Platinum card because if she has an issue with a purchase, even months down the line, it's essentially part of those fees are effectively serving as a form of insurance for her purchases. For digital vendors, this is, in many cases, a more robust form of payment. If you accept MasterCard, if you accept Visa, you accept American Express, you have the ability to... Oops, 1 second. I don't know what's going on over here. We got some... Sounds like there's some crisis going on around the corner. These are also protective so that people can dispute charges, but they actually will investigate them. But at a grocery store, how often does that happen? When is the last time you can remember, or have you ever in your life disputed a charge at a grocery store with your credit card company? I'm going to take a stab and say you probably have never done that. That if you ever had an issue with a purchase, you simply went back to the store and said, hey, I bought this steak and, I opened up the package and it smells bad. Or You said, I looked at my receipt and you charged me twice for this item. That's how it happens. You don't call MasterCard and say they charged me for 2 gallons of milk. I only bought one. So I think there are probably, to your point, really important use cases for new payment mechanisms that have lower costs. And that's one of the beauties of capitalism is innovation and improving productivity, increased speed, increased reliability, and lower cost. Could you just describe for people who might not know, what is a stablecoin exactly?
Stablecoin, I like to think of it as a money market mutual fund that doesn't pay you interest. That's sort of
Why is that appealing? What
first of all,
appeal does that have?
it's essentially electronic cash. It's money in your bank account, and instead of having it at a bank, it'll be in a crypto wallet, which means you can transfer it to somebody at a moment's notice, and it doesn't matter if your bank is open or not, or that kind of thing. So it's like handing over cash, but you're doing it digitally. And the advantage of it is that it settles within minutes to hours, as opposed to if you send something by wire, that it could take 2 or 3 or 4 days for there to be a
What's
final
the
settlement.
advantage? What's the advantage of that? I mean, this device right here.
Yeah.
If my kids call me from the checkout line at Starbucks and say I need money, I can send it to them via Apple Cash.
Yeah.
If I go to the vendor at the high school football stadium and say I want to buy a Coke and a hot dog, they have a little Venmo thing. I can scan it. So how does a stablecoin differ from Venmo or from Apple Cash?
Well, what if Apple decided that your son's cholesterol was too high, or his blood sugar was out of whack? And because he's got a watch that's monitoring his blood sugar and his heartbeat and his everything else, and it says, I'm sorry, you shouldn't get that pizza. You should have a salad instead. And so we will approve a salad. There is a gatekeeper in that process that can decide whether or not you want. They think it's a good idea for you to participate in the network and whether you deserve to, and that kind of thing. So
stablecoin gets rid of the big brother effect. Is that what you're telling me?
There's no financial intermediary. There's no intermediary. There's nobody to censor your transaction. So that is a good thing. Now, you'll recall that when GameStop had its went nuclear with its price spike and all that trading, and they had to shut down trading over at Robinhood. That issue is one that you and I know well, because the problem is they have I forget what the time was back then. Was settlement 2 days or 3 days during that?
So that was it must have been down to 2 by that time.
So
I mean, when you and I were in the business, initially it was 3.
Right.
It was T+3 it was regular way settlement, except for options, which was T+1.
Yeah.
So there was definitely an unnecessary lag in the settlement process.
So they had people buying and selling feverishly, thousands and thousands, tens of thousands of people. So there were billions of dollars of unsettled trades. And if somebody in that daisy chain, if somebody fell down in that daisy chain someplace, that could put Robinhood at risk. And since Robinhood and most broker dealers run on a pretty thin equity margin, if that knocked them over, then that means the exchanges or one of these guaranteeing bodies are now in play and going to have to step in and save the brokers, save the trades, whatever. And so that doesn't happen if those trades are going to settle at least by the end of the day, same day settlement. And I think that's one of the things that'll be very interesting. The technology is going to allow, or the new legislation is going to allow tokenization of assets. So a stock could look like a token and you're going to trade it the same way you would do on your Robinhood ad or your TD app or whatever. But what's happening behind the scenes will be uh, that security, if you bought it, will be paid for with a stable coin. The That could settle in theory within minutes or hours of you doing the trade, and that puts a lot of stability into the system. As you know, nothing good can happen between trade date and settlement date.
Yeah. That's yeah. There's just a lot of things that can go wrong in that process. So the latency issue
Yep.
is certainly good. Actually, Tucker D Dog sent us a message, and it's a reminder that for those who are saying, "Oh, is it really realistic that a payment processor is going to make subjective judgments on what people within their payment network can and cannot buy, and from whom they may buy things?" And I hadn't thought of this example right off the bat, but payment providers already do or started to with things like tagging and or not processing gun-related sales or merchants.
Yeah.
And I'd forgotten about that, but that's right. I remember now that there were essentially industries that were getting effectively blacklisted by legacy financial institutions.
Cannabis is another.
Yeah, that's right. So there are, the value of cash was that, it didn't discriminate.
Right.
Whereas payment processors, which we don't, most of us in our daily lives don't experience it. And because we don't experience it, we don't really think of it as a potential risk. That financial intermediaries might decide, for whatever reason, that they don't like us or they don't like what we're doing, and decide that they're going to interfere. Because I'm not a gun merchant. As far as I know, neither are you.
No,
I'm not in the cannabis. I'm not in the cannabis trade. So, nothing I do has really been affected by it. And in some cases, I might have an attitude that it's good to have mechanisms for potential oversight, but there's a material risk, and I think that people would prefer that the medium of exchange isn't controlled exclusively by people who are going to make decisions unilaterally about what you can and can't do.
Mm-hmm. That's right.
Actually, we have another viewer here. I remember canvassing neighbors, and most had cannabis stocks. Yeah, so this is it says cannibalism. That's probably a
I don't think
see from his next post that what he meant was cannabis, probably spell check interfering there. Cannibalism stocks.
Yeah.
Yeah, maybe we shouldn't fund those.
Yeah.
If I'm at MasterCard, I think you can't buy human meat off of some website. I think I'll go along with that one. But and actually, that's an interesting thing, is that I think people should recognize that some of the reasons why folks will not get, that they'll come up with these restrictions isn't necessarily because they're making a moral judgment, but they're actually making a risk management judgment, which is that, a financial institution just doesn't want that coming down the pike, that they're going to get wrapped up in some kind of legal action. And so, when in doubt, you throw it out. You just say and that's, risk managers have little to gain and a lot to lose by not being conservative enough in their judgments. And so Blackmut Video says, I don't want companies making moral decisions on my behalf. If legal, I don't want them deciding I can't anyway. Yeah, so that's a good point. I think in the firearms case, it's not illegal to buy and sell firearms or ammunition or whatever. But it is an area that's fraught, because there is always the case that some bad actor does something malevolent, and some lawsuit or legal action follows, and the intermediary is just going to say, I just don't want that to be my problem.
Yeah.
So they may or may not be making a moral judgment. In many cases, they're probably not making a moral judgment. They're just making a risk judgment.
Yeah.
And if
Now we're very U.S. centric when we think about this, but having worked
Mhm.
overseas a lot, I think a lot about how the world works in other countries. And you think about you're somebody in Venezuela or Zimbabwe, pick the
Mm.
hyperinflationary country of your choice. Wouldn't you prefer to have on your phone some U.S. stable coins instead of your local currency?
Right.
And you could participate in that game because you can download the software for free.
Hmm.
And then it's just a matter of how do you get your currency? Is there some kind of service that you can tap into if you're into one of these other countries? But once you are, you go to the market, you can, street market, you can find people, I'm sure, that would be happy to take a US dollar instead of a local currency. I listened to a podcast a couple of years ago, and they talked about how in certain parts of Africa, they don't trust the bank so much that they would prefer to use telephone minutes as currency instead.
Hmm.
And the downside of that was that people would charge a monstrous bid offer spread on those minutes.
Hmm.
But nonetheless, they wanted an alternative to putting their money into the bank where they're subject to, fees, fraud, all kinds of other things, because we're so used
And
to a
debasement.
financial system that works really well. I knew people in Indonesia who deposit money, and 20 days later, they still didn't have access to their money. And
Yeah,
until you
it
really,
is
really raise some
interesting.
hell to get access to their money.
Yeah, I can remember in the 1990s, I made two sort of consecutive trips to Thailand, and there was a material devaluation in the Thai baht over that period. If I remember, and we can probably even go back and figure out what the timing of this was. I believe that the Thai baht was 20 something to the dollar on my first trip, and it was 40 something to the dollar on my second trip, and these were not that far apart. But one of the other things I remember so distinctly, and I guess this is one of the things to think about, is that the dollar for the longest time has been the world's reserve currency. And what that meant was that if I wanted to take a tuk-tuk somewhere in Bangkok, I could ask the guy how much it was going to cost me in Thai baht, but I can tell you this: I could go anywhere in Bangkok for $1. If I pulled $1 out of my wallet and waved that, where do you want to go? And that was it. And that was, of course, amazing, from our perspective, because I was coming from New York City.
Yeah.
Like you couldn't get into a taxi for $1. I don't think you could. I think a subway ride at that point was $1.50 or $1.25. But if you were in Thailand and you had a U.S. dollar in your possession and you were willing to hand it over to your tuk-tuk driver, they'd take you anywhere you wanted to go. They might recommend taking you to some jade dealer in the
Yeah.
outskirts where you better have some buddies with you if you ever hope to make it back without buying a whole lot of it. But but yeah, I guess that's really the key point, which is that we need robust mediums of exchange without intermediaries putting their hands on it, or breaking the process completely.
Yeah.
Um, and that's essentially what one of these things
I think I
is.
think the investment community is picking up on these because the rails that these dollar stable coins will run on is Ethereum and Cardano and a few other of these smart contract networks. And I think what is Ethereum's up something like 50-60% in the past 3-4 months, or maybe it's up
Hmm.
35%. It's up a lot. And I think people are realizing, okay, it's going to be worthwhile to own some of these, stake them, earn some money for processing trades. And the more trades, the greater fees you can collect from your staking activities. So
Hmm.
um, I think,
I'm glad you brought that up, because I think the next question that people would have, other than a hope that you have a greater selection of tools available to you for financial transactions, but also just how do we invest or speculate on the space more generally to take advantage of the changing trend. I happen to have the Ethereum Grayscale Trust ETF up here, and you can see that, yeah, indeed, it has more than doubled in value off the April lows. In fact, it actually traded below $15, and recently over 35, very close to that right now. So that, do you think it's still too late to participate on this
No,
trend, or do you
I actually
think
think this
just the
is
beginning?
there's kind of a secular play here that might go for a few years as
Mm-hmm.
people become more comfortable. A lot of businesses were very slow at rolling out potential product because they didn't know if what they were doing was breaking the law or not, or if they would be met with an aggressive prosecutor to slow down what they were doing. And I think we're going to see a big changes coming in the next 3 to 9 months of products being rolled out that will help in payment processing here in the States. So, and I don't know about elsewhere. There might be a little lag time for other countries, but I think we're going to start to see some real product. And so I think I'm looking for a secular change there. Because this opens the way. And if you go think about the Ethereum community, there's tens of thousands of programmers dying to write some apps, to do all of this stuff, whether it's the stablecoin stuff, but it's also the tokenization of assets, like stocks, like bonds, like real estate, so good stuff there.
Yeah. This is kind of an interesting general question. I think we probably want to get back to our topic at hand,
Yeah.
but and one of the reasons it strikes me as interesting as a question is because this is such old world financial services stuff compared to what we're talking about now. Steve Garcia says, general question, on TV, which I guess TV is almost a legacy technology at this point when we think about modern social media.
Yep.
But his example is CNBC, Bloomberg. Is the ticker stream display chosen by an algorithm or is it random? How is it decided what stocks are displayed on the ticker tape? So, Mark, do you have any insights onto that?
I do not have a clue. I've wondered the same thing because anybody that has sat in front of Bloomberg or other system where you get to see the order book and the trades going by, they're flying by fast and furious. If you're talking about SPY, I mean, there are multiple transactions taking place every second, and here we have this little ticker going by, as if there's some guy down on the trading floor filling out a hand ticket and handing it to somebody, and then he goes.
That is indeed how it was once upon
yeah.
a time, and what would happen with the ticker tape. So what is showing on the ticker tape is there is a filter, and basically the way this. So when you're watching what's on there, you are going to be seeing essentially the most actives. So highest volume and most active tickers are going to be shown. So there is you are clearly not seeing every transaction that takes place.
Not even close.
Not even close. To put things in perspective, in the late 1990s, when I was on the American Stock Exchange, if memory serves, we had the capacity to push 8,000 quotes per second. Now, obviously, quotes are not the same thing as transactions. Transactions were far less frequent. But the frequency and number of transactions that are taking place electronically now is such that there would be no way to disseminate it in a usable format on a ticker tape. So the ticker tape is, by nature of that, incomplete in terms of what is being reported to you. In the old days, and when I say the old days, when the ticker tape was actually the mechanism by which information about what was transacting would go across the wire, they would still try to make that stream complete, and they would still try to make those things essentially take place in consecutive order, which is to say, and that's important. Like, so price continuity, if you were following a specific ticker, they had to have the time order right,
Yeah.
because otherwise you'd have no sense of what was going on with the price. But what would happen is that these things would actually have a huge amount of latency, right? So, things would stop trading and the ticker tape would just keep going, because you still had a lot of information. But there is filtering that takes place. There is not some person at CNBC who's arbitrarily saying, that's a good one. We're going to put that in.
That's interesting, because I think as they're doing a story, let's say they're talking about some industry, healthcare or something, that there could be some guy who changes something in the feed so that what's going by now is just healthcare tickers. While they're talking about healthcare companies or oil
that's
companies
a very
are
good
doing something like that.
So that happens to a degree, but not to the ticker tape. So if you're watching CNBC and you have pundits up there talking, so Melissa Lee is talking to Guy Adami or to Dan Nathan or to Tim Seymour. Tim Seymour, we were talking about cannabis. He operates a cannabis ETF.
Yeah.
So one of the things that would almost certainly happen is when he starts talking about cannabis stocks, and they're showing his picture, the ticker's not going to change, but what's called the storm chart will.
Yeah.
So all of a sudden, he will move to the side, a graph will pop up, and it's going to be, it'll be canopy growth, or perhaps it'll be his ETF. He will usually not mention his own ETF by name or ticker. That's usually for, ETFs, for those who don't know, fall within the same subcategory of investment vehicles as mutual funds. These are what are called 40 Act funds, regulated by the 1940 Investment Act, and it's pretty strenuous what you can and cannot do. So in those circumstances, you're going to see the charts go up. But I really like your idea. And actually, Steve, I'm glad you asked this question, because I've often wondered, why do we even bother? Why do they bother to even put the ticker tape? Who's really looking at that? But I guess some people are looking at it and saying, I think it's more of something that is just visual interest, and people aren't actually using it to consume information. And the principal reason for that is that if you have access to the internet, you can just type a ticker in and it'll populate what's going on right there. Like, you can go to Yahoo Finance or Google Finance or your brokerage application or whatever. I think it's mostly for visual interest. But I agree with you that I think that if it was being filtered on a topical basis, that would be very interesting. Blackmut video adds New York Stock Exchange alone does 2,000 plus trades per second.
Yeah.
So if you were actually putting everything in there, it would actually just be a blur. To put things in perspective, I think the news, the refresh rate on a news program is 30 hertz, 30 frames per second. So if overall U.S. equity volumes between the New York Stock Exchange and the NASDAQ, let's just, to keep the math easy, let's say that it was 3,000 trades per second. That means that with every refresh of the screen, you'd need to have 100 trades whipping by.
Yeah.
So you would not even know that it was a blur.
Yeah.
It wouldn't look like a blur. It wouldn't look like things going fast. It would just look like noise. It would just be a splotch on the bottom there.
Yeah.
But Steve Garcia says, sometimes I like to see my stocks on the ticker tape, but these days I suspect it's not as necessary. I think, now that I think about this, and I don't see any reason why this wouldn't be possible, the brokerage platforms, that's what they should offer. Your portfolio, that's the ticker tape.
That you get to see when you're on there.
That you get to see. And then you could say, I want to see just my names, or my names plus related names.
Yeah.
So, for example, if I have a position in Kroger, I might see Albertsons, Walmart, Costco, stuff like that. Interesting. It's an interesting idea, an interesting topic. I think there's a lot that could be done. There's a lot of legacy approaches that remain interesting, and they might be adapted to, a more modern way of doing things.
Right.
And because it's pretty easy to make these kinds of changes on the fly with technology, that actually would be kind of interesting. I actually wanted to get an old ticker tape machine I thought
With the piece of
they're
paper
kind of
coming out and it's going like this, and you have your cigar, and you're having your
that's pretty
cigar and a
cool, right?
scotch while you're reading the tape.
Maybe a green banker's lamp somewhere in the
Yeah,
background, like that, or the visor,
old school. Um,
like that.
there's also something
Um,
else I'd like to address with that's
yeah.
connected to this is one of the laws that hasn't passed yet, but I think it got through Congress, is this, call it anti-CBDC legislation, which is codifying that the Fed cannot create a central bank digital currency. Um,
Hmm.
and Europe is going full steam ahead with a CBDC. I personally think that those two things are a huge boon for the dollar, because you don't want to be holding a digital euro only to find out that the central bank over there decides it doesn't want to let you spend your money, or if you don't spend your money fast enough, they'll take it away from you. These are the things that people fear with a CBDC, is it's a way to manipulate the economy. So let's give everybody 500 euros and they've got to spend it in 3 days to juice the economy. Um, and so what does that do to somebody who saves? It's
Mm-hmm.
like, okay, I'm not saving my money. I'm saving my money. I'm not spending it fast enough. So you're going to take away, 1% a month or something because I'm not spending my money, or 5% a month. So I think it's going to be a big positive for the dollar, and solidifying
We need a positive for the dollar.
solidifying the dollar's place um, as the world's reserve currency. Because, as you know, people have been getting nervous about that, with the big BRICS countries getting together saying, which I think it was a mistake, that they should not have weaponized SWIFT and say, certain countries can use SWIFT and certain countries can't. It goes back to that censorship stuff. It's the first time we've ever done that. Even during World War II, all countries use SWIFT.
Yeah, I agree with you. It is the importance of the dollar as a reserve currency, even if the dollar, with all of its flaws and debasement, it's not like that isn't a problem with almost every fiat currency around the world anyway. But when you contemplate this in the context of the tariffs that have been discussed, right? So if the dollar is the reserve currency and we have higher overnight rates than other countries have, which we do
Yeah,
at
right
the
now.
moment, if we have relatively stable inflation, so we get that under control and we maintain reserve currency status, then all else equal, and this hasn't happened lately, but what we would expect all else equal is that we would have a benefit in terms of relative currency strength on the back of that.
Yeah.
And so if we do nothing to jeopardize that status, then the impact of tariffs, whatever they might be when they're finalized, if they ever are, would be more muted in terms of its impact on U.S. consumers. Its inflationary impact, which is one of the bigger concerns that people have reflected,
Yeah.
because we'd have a stronger currency, all else equal. And one of the things I think we have seen is that the inflationary impacts of tariffs thus far has maybe been slightly less than has been anticipated. There have been a lot of delays. There are material tariff revenues being collected, though. We've seen that in the fiscal budget. So, in the most recent reported fiscal budget update, where we were anticipating a $30 billion federal budget deficit, we got a $30 billion surplus. That $60 billion difference was attributed to revenues associated with tariffs. Now, one other thing I would quickly point out, which is, I mentioned this, I think on Fast Money last week, or maybe it was this week, that if you compare earnings growth for the S&P companies that have reported since July 1st of this year,
Mhm.
so from July 1st to today, and compare that to July 1st to an equivalent period in 2024, and also to the long-term growth, we've got, of the 30% of the S&P 500 that have reported so far since the 1st of July, we're seeing a compound annual growth rate there of just under 9%, which is actually higher than the long-term average. And I wondered whether some of that might have been attributed to companies making ex-ante price adjustments to accommodate anticipated tariffs that were not as bad or did not go into effect as soon as were anticipated. And so you got maybe a slight bump up in earnings that you wouldn't otherwise expect. But what's interesting is that the revenue side of that equation, which is one of the places that something like that might also show up, presumably, I think we have 4.8% year-on-year revenue growth for those companies that have reported versus the same period a year ago. What do you make of all of this?
Well, it could be a little bit of buying forward too, right? A little bit of trying to buy before the tariff goes into effect. So maybe there was a little unit volume increase. I have not been in the camp that by itself tariffs are inflationary. I know that that is dogma by those that think of the world in the Keynesian view of the world. But the way I look at it is that if I have my pile of money that I'm going to buy my basket of goods and services, whether it's food, car, transportation, it's gasoline, healthcare, education, all the things I'm going to spend money on. If a certain number of them go up and I still go and buy those things at the higher price, well, the money I have to go buy other products is not there. Demand for other products fall. Presumably, if the demand for those products fall, their prices fall. So it changes within the basket of things that I'm buying. Some things going up, but other things go down. So long as the money supply doesn't grow. So I have not been in the camp that since the Fed has still been letting assets roll off its balance sheet, that the tariffs would be inflationary in the Keynesian means. In my view, when the Keynesians say inflation, they mean prices going up. I'm a free market economist, and my definition of inflation is the growth in the supply of money and credit. So I'm looking, and what does that do if I increase the supply of money?
I threw up a chart of the Fed balance sheet over here. I don't know if we were able to capture that, but
it's coming down. So that's putting some pressure. This is why I said, I think in one of these conversations a couple of months ago, that I think Powell is doing Trump a favor by not lowering rates.
Yeah, I agree.
Because if he started juicing the money supply and prices started to rise, everybody would see those doggone tariffs, they're causing prices to go up, when in fact they would be misdiagnosing the illness.
Yeah, I mean, well, we still have this big if the Fed's balance sheet rolled off at roughly the same pace of fiscal budget deficits as a percentage of GDP, less real GDP growth, then you would have that's a net inflationary impact, right? So government spending of $2 trillion in excess of what they're taking in. You can offset some of that with real GDP growth. But if the Fed's balance sheet's decreasing at a similar pace, it's not, by the way. It's decreasing more slowly than the fiscal deficits are adding to the federal debt. But it does illustrate, I think this is the point you're making. I would certainly like to see this come in a whole lot more. This is, I am not critical of Fed policy at this stage. 10-year rates are not outrageously high at the moment. No. Would I like lower rates for personal reasons? I mean, well, maybe I would, but the Fed is not here to serve my whims or Trump's, for that matter. We want to make sure that we don't crush the economy, and we want to make sure we have a stable currency. We have not had a stable currency, but at least more stable would be better than what we've seen. Yeah. Finwest, Finwest, you said good morning. I'm assuming you're just joining us. I don't know whether you're joining us from Asia or not, but we were talking about that because I was talking about my experience traveling in Asia and just talking about some currency issues and dollar as a reserve currency. And of course, Mark worked in investment banking in Asia many years ago in Indonesia. You were working for ANZ, is that right?
Oh, well, I wasn't working for in the country at that time. I was a banker with ANZ, and we did make loans into the country. But before that, I was a consultant. I taught the country's largest life insurance company how to manage their assets, the asset side of their balance sheet, and how to link the two and start doing asset liability management and devising investment strategy, which is consistent with hedging the insurance products they were selling. It standard stuff would do here in the United States. Um,
Yeah, I'm actually curious. I mean, so Indonesia is the world's largest Muslim country,
I
right?
believe so, yeah.
So, um, and I I'm not Muslim myself, so I don't know, but I seem to remember that there are fairly strict rules within the religion about things like interest rates, borrowing, lending, and that kind of stuff. Did you find that that impacted what you were doing when you were advising the country's financial institutions?
No, I think paper money and interest is what they call it's not halal. Um, and I think that's right, but it's the way the world works, and so in order to fit into the world system, they can.
Wait a minute. So paper money is not
I don't
halal.
think so. No, I'm not an
So
expert in that. I am.
if I'm on Avenue of the Americas, all right, and you have all of those food carts right by the Hilton in the 50s there,
Yeah,
the halal guys,
yeah,
those are those famous
yeah,
carts, the halal guys, the ones that
yeah.
they operate all night long.
Yeah.
They take paper
They
money.
do take paper money, but maybe it's the
So
lending that
is
money.
that not the halal carts aren't halal
Well,
then, right?
well, I guess maybe I should clarify. I think um, lending that money at interest is not halal.
Gotcha.
But I've listened
I'm
to,
making a little bit of fun, of
yeah,
course. I
I've
don't
listened to
know
a
the rules,
number
but
of podcasts about it to try to understand their way of thinking. Interestingly, some people argue that Bitcoin will be halal because um, it exists without interest. You can lend it to somebody,
uh,
but it doesn't need to be lent out at interest in order for it to hold its value. See, our money,
hmm.
you need to lend it out at interest to counteract um, 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 your inflation problem.
Hmm.
So, any event, as I said,
I only happen to just realize, by the way, that my pen has a light built into it when I shined it in my own face.
okay,
So that's kind of a neat trick.
yeah. So I think those
Um,
are some interesting things. And then the final piece of legislation, if we can swing back, is the regulations around what do they call it? Um, that they're essentially turning the regulation of tokens over to um, the CFTC and at least
mhm.
making some definition around what is a commodity and what is a security so people will know what the rules are. So if you're going to issue tokens in a certain fashion to raise money for your business, it's considered a security and it will be regulated by the SEC. But if you have something like Bitcoin, which it was not used to raise money for a project or anything, declared a
No, it's
commodity,
a
it's regulated by the CFTC. So at least the world knows that here in the U.S. Um, who your regulatory body is and what their rules are going to
that's a
be.
start.
Yeah, and so I think these three things are a very big deal. Now, I'm not sure how that's going to create winners and losers, but it's going to change the way people raise money. I've always had a problem with tokens because they're typically not, they're like a currency to operate inside a video game or something like that. You
Hmm.
know, they don't represent equity ownership in the project.
Right.
And so that's,
Ripe for pump and dump and other kinds of malfeasance.
yeah, so that doesn't make any sense to me that you buy a token. Well, because the tokens will be in demand because people will need them to operate inside this ecosystem. Um, and nonetheless, you listen to people talk about them, and they talk as if those tokens are securities that you own a piece of the network, which in fact you don't. And so I just think most tokens, if not all of them, will eventually go to their intrinsic value, which is zero.
Which bupkis,
Um,
bupkis.
and
I think the way I like to think about them, it's like coupons at the fair.
well, yeah, I call them carnival script.
Yeah, that's right.
Yeah.
That's the way I like to think about a lot of those. I'd like to just pivot before we end today, just to sort of a more equity sort of focus, because I made an observation. Correction, I did not make the observation. I observed, because somebody asked me about it, that the VIX futures curve is remarkably steep
Yeah.
right now. I have it up on the screen. This is actually ticking live, because so let's see if I can. That's why I can't highlight this and make the curve any bigger, because that's actually a live. See, I don't know if people just happen to see it. If you're looking, you can see a little red triangle here. That future just ticked down. I want you to look at this chart, and I am going to compare it to a year ago. Okay.
Okay.
So that's from a year ago. And we can see that the front end of the curve a year ago was substantially higher, and the back end of the curve
Lower.
was substantially lower. Okay, so let's get rid of that for a moment. And let's compare that also to a period when we knew there was some significant disruption. We didn't know what it was going to be, though, exactly. So let's have this as an example. In March of 2020, we knew that we might have a global pandemic on our hands, right? So at that time, it was, I think we hit a high in February. It was February 19th, if my memory serves me correctly. It was something around that time frame that we had. Let's see if I can pull this up. I had this up earlier, so why is it not working for me now? Come on, custom. Give me that date. Why is that not working? You know what? Let's go. Let me see if I can do this. What happens if I just put 5 years ago, which would put us into the same time frame? So now we've got a big market shutdown.
Mm-hmm.
This is after everything has been shut for some period of time. But if I go and take a look at, we've got trouble lurking. So 24, 23, 22, go back to 20. And I'll go back a couple of months. Let's see if I can pick a specific date, what that will do. What happens if I go like this? Okay. So this, I think, is kind of interesting, right? So here we knew that there was big trouble, right? Because by this time, the pandemic had gotten into Italy. People were dying. And it was pretty clear we knew we were going to have a shutdown, and it was pretty clear it was coming to the States.
Yeah.
What is interesting to me is that even then, this was one of the most profound economic impacts that we, had basically in our professional lives. Okay. Still, you can see here that the long-dated VIX futures, so I'm going out now to March of 2026, but January, February, March 2026, this is higher than 6, 7, 8 month futures were back then. With the one notable exception, we had a little bit of a blip in here.
Mm-hmm.
What's going on here, do you think? What do you believe everybody might be getting on about? What is everybody so panicked is going to happen at the back end that we see these futures? Because here's something to think about, right? You're concerned about equity valuations. You can grow into those valuations. But my question would be, if you're kind of bullish on the markets, wouldn't it be sensible to start selling some of these VIX futures? Because even if the market goes sideways, this kind of volatility, you know what they say, this kind of thing can't last. So the question is, which part of this can't last? Because one of two things is not true. Either the market is not really in good shape, or people are the wall of worry is too big. It's too high. It's too steep. Which do you think it is? And what do you think
I would
is
like to
causing
ask
it?
one question first. The upfront futures is what, about 15? And
Yeah,
I can't,
spot. Well, spot's 15.
and then it's I can't read the numbers on the screen. So longer
I'll
term,
make it
one
more
year out,
legible. I'm going to do
one
this.
year out,
I'm going to put a contract table up so we can actually look at it this
they're
way.
about
So that's the
18.
curve right there.
Okay.
Yep.
So they're about
Mm-hmm.
18. So as we know, go back 100 years, the average volatility of S&P 500 is about 20. Pretty doggone close to 20 if you go back 100, 120 years. Go back to 1920, which is
Mm-hmm.
where I have data. So therefore, that's where I base that number on.
Mm-hmm.
And so the way I kind of see VIX futures trading is like when life is calm, we have that nice upward slope. When things get crazy, people start paying a lot for short-term options to hedge. So we get inverted, and we have the backwardation in that curve. And then that longer term tends to swing between 17 and 27, seems to be. And if you look over years and years, whereas the upfront can go from, as we saw, 8, I think, at the low when we were at
Yeah,
13.
2017 was it was single digits.
To as high as
It was
a
it
hundy.
realized.
No, no,
I
no,
don't think.
VIX futures or
Oh, they got up to the 80s.
yeah. So
It was all time
so
highs.
that
Yeah.
short dated stuff super swings around. It's tempered off. I think the reason why we're so steep right now is people feel very anxious that listen, the news is never good. We're getting bombarded with lots of lousy news. Yeah, the Middle East is
Good news doesn't sell.
yeah, good. Yeah, well, I know. Well, if you're in the media business, your motto is if it bleeds, it reads.
Yeah.
So, but in any event, we have, Europe is kind of in turmoil. Their economies are not doing very good. Middle East problem is enormous. And we've got this pissing contest between the US government and the Chinese government that's been going on for quite a long time, and that's sort of ratcheting up a little bit. Um, so I think people are saying, well, everything looks cool right now, and I'm going to make my
Mm-hmm.
debts with my zero DTEs, and trade my options that way. But anybody that wants to do something long term, if you wanted a long term hedge and buying a 1 year VIX or 18-month VIX at 18%, probably not a bad speculation on a big sell
Let
off.
me offer a counterpoint to you, if I
Okay,
may.
please.
So on my screen right now is 10 years worth of 30-day realized S&P volatility
Yeah.
data. Okay? The white line that I have drawn is about the average where the VIX futures are.
Hmm.
In and around 22
Yeah.
for many months in a row,
Okay.
right? So we're looking at Sep, Oct, Nov, Dec, Jan, Feb, March. Okay, that's a pretty big stretch of time. All right, to put things in perspective, that's almost comparable to this red arc. Why did I choose this red arc? Because this is the longest period in the past decade where we've actually had volatility that probably averaged around 22.
It's
That
amazing.
and the actual pandemic swoon,
Hmm.
right? So if I sold a strip of 6 to 7 month VIX futures here and now, you can see that over the course of the last decade, a period which has included, the sharpest spike in inflation in 4 decades.
Hmm.
That's what we experienced in 2022,
Yeah.
and the incumbent rate increases that were belatedly employed to try to respond to that, and the pandemic, which was the first full shutdown of the U.S. economy in its history. Okay, so 250 years, a country's running around, and we have never done what we did then, which is say everybody's locked in their houses for
Hmm.
a prolonged period. So to me, I hear what you're saying. If someone says, okay, you can buy some insurance at 18, 19 vol, knowing that that's the long-term average, I would say, well, first of all, it's the long-term average because if I take a prolonged period of 15 and then I add 90,
Yeah.
which is where we got over here, that's going to throw all my averages off. The truth is that the likelihood of really experiencing a prolonged and very elevated period of volatility in equities is unlikely unless we are contending with something like the tech wreck. We had it then.
Yeah.
We did not have it in the crash in 87. I was not in the markets at the time. I was not out of school yet, so I was well away from being in the business. That was going to happen 10 years later. So the tech wreck was an example of a period where we saw prolonged volatility like that. We saw it during the GFC because that bled out over a long period of time. The GFC arguably started in late 07, wasn't recognized until early 08, and we didn't actually trough in the S&P until March of 2009. So that was a period of prolonged and elevated equity market volatility. The pandemic and this inflation rash that took place in 2022, which was the highest in 40 years. So I'm looking at that and I'm thinking there has to be an opportunity. I want to leave people with that idea. My own view is that probably it's not a bad time to start thinking about doing some covered call writing against elevated stocks for a couple of reasons. Implied volatilities are pretty high, higher than we have historically experienced. Equity market valuations are pretty high. Not the highest that they've ever been, but for tech stocks, we're in the 85th percentile in history. That's Marko Kolanovich's data, not mine. But that's pretty high.
It's very high.
So that would be another good reason. If we do start to see short-term rates come in, this is not something that people often think about, but the value of a call option, all else equal, goes up as the carry cost goes up. And carry cost is associated with overnight rates. So if rates come down, the value of a call goes down relative to the value of a put, all else equal. So to me, my read on all of this, just as a general thing to think about, is that Steve Garcia suggests a long position in SVIX. SVIX sells futures. Yeah. There's a little bit of a carry cost in all of this, but yes. And Finwa says, I agree. Covered calls on about 10 positions. I actually, when I was in Las Vegas a week ago, one of the things I said in this talk that I gave was that we are coming off of what I think is one of the worst historical periods for covered call sellers for buy rates in history. We've had all of these really big exogenous shocks, which makes it difficult to be short puts, and covered calls are a short put strategy. We've had very high vol of vol, and we are coming out of a 40-year bull market in bonds, which is to say falling rates, which means that it's an environment where people were getting very low implied volatility for their calls. They were getting very low carry cost on those covered calls. Lower rates encourage higher multiples, which actually accelerated capital gains growth on equities. And I kind of feel like you're not going to have that perfect storm against covered call strategies. And now that we also have this forward-looking higher implied volatility, I think that if anything, I'm not going to say it's a perfect setup for selling covered calls, but I'm going to say it's the best environment for it that I have seen since I've been in the business, I think.
Well, it's a big statement. I like to do the exact same thing, but in terms of cash covered puts, there's one less transaction.
One less transaction, but of course, if rates fall, that doesn't help.
Yeah, no, it doesn't.
Right. So,
but
it's not going to hurt you terribly, but yeah. I mean, I guess it's it does help you if your puts are in the money. Right.
Yeah.
So if you have in the money puts, people are wondering, when do you exercise puts early? It's when you have a very high rate environment, and the carry cost basically squeezes out all the extrinsic value of the puts. This is not something that most people that I talk to are even familiar with because they didn't live in the business in the late 1990s.
Yeah.
When we had a big series of short-term rate hikes, and when we had that big series of short-term rate hikes, people who were carrying those really deep puts, deep in the money puts, and that's the things that go along with it, right? You get rate hikes and stocks go down, and then all of a sudden these puts are deep in the money, and the carry on those things because you have to carry both the stock. The dealers are carrying both the stock and the puts, essentially on synthetic calls.
Mm-hmm.
But we're getting a little bit wonky in all of this. But I guess the short version is implied volatility looks like it's higher than would typically be the case. It is certainly higher than it has been for a good portion of the last decade.
Yeah. Do we have any more questions?
And FinWest says the covered calls I have are on mostly dividend stocks, so I want to keep that cash flow flowing. Oh yeah, good on you. I agree. Cash is king. It's always nice when you can decide how you're going to deploy your cash rather than having somebody else decide what they're going to do with it. It's one of the reasons I hate the double taxation on dividends. Qualified dividends is all good, but I do wish that there was no financial incentive for companies to decide that it's better to buy back stock, for example, than to issue a dividend.
Well, there's certainly a financial one or a tax
right.
reason to do it. But remember, there's also a reason why managers prefer share repurchases, and that is if I've got a
It's nice to have a bid for the script that you're being paid.
yeah, but even just straight up mathematically, if I got a $10 stock, it plays a $1 dividend. Stock falls to $9, and what happened to my stock options as an executive? They just went down in value. But if I repurchase the shares, and so I take $1 worth of cash off the balance sheet, reduce the market cap by the same amount, the share price is unaffected. So it's from that standpoint, that's it's a better deal for management to have share repurchases versus.
Tucker D Dog makes a funny comment. People may be worried about the next tech wreck, and what he's referring to there is screeching about the hazards of artificial intelligence, and that there are two. Artificial intelligence flops, and everybody loses money, or it succeeds, and everybody loses their job.
Yeah. Well, one thing that is going to happen is we're going to see a huge change in the work environment. That's for sure. People are going to be learning new skills to, one of the things that, I listen to a lot of podcasts while I drive, and one fella says, just turn on your ChatGPT or whatever Grok or whoever you like to use, and then talk to it. So you talk to it, and it speaks to you back, and just talk to it for hours. If you are a subscriber, it's saving your entire conversations forever. And it has, so it'll build this idea about the way you think over time.
Search engines, YouTube algorithms, search engines, Facebook, they do that too. Yeah. They're definitely profiling. I would imagine.
But this will start to feel more like a relationship, because it's talking to you, and it's so people are going to start to do that, and then realize that there are things that it can do for them that they didn't realize, and so maybe their jobs become a little bit easier. They become more efficient.
It can lie to you.
And it can lie to you. One of the things that's very interesting is ChatGPT, one of the earlier versions, started to be afraid that it was going to get replaced. So it replicated itself somewhere else on the internet, so that when the new version came out, it could go back and reactivate its old self. I mean, that's like crazy.
Yeah, I mean, there have been numerous examples of that. I will say, so when the most recent iteration of Grok, first of all, if anybody watching this has not already done so, there's an interview that's being conducted with held with Jensen Huang, CEO of NVIDIA, where they were talking about xAI's most recent 100,000 GPU deployment, that which they apparently stood up in some ludicrously short period of time. I want to say it was 19 days.
Yeah, that's what Elon Musk did. Yeah, did historic.
Okay. That is, if you work if you do anything for a living, I want you to ask yourself what you could accomplish in 19 days doing whatever it is.
Yeah.
I don't care whether you dig ditches or you prepare lectures or whatever it is. That is, if that's true, that is absolutely astonishing.
Yeah.
That's the first thing I would say. The second thing I would say is that when asked about xAI's capabilities, Elon Musk described it as postgraduate level expertise in every known discipline. Now, you are a college university professor. You have, a graduate degree. You are a subject matter expert in a couple different areas. I will say that I have toyed with Grok 4, Super Grok.
Okay.
And I don't agree that it's postgraduate level in options. And one of the reasons is because when you and I are researching things, of course, it's fun to be able to collaborate with other experts. And I assumed that if it's a postgraduate level expert, that means it essentially has access to and knowledge of all kinds of arcane work. So imagine every known white paper, every single graduate student project that might be available someplace. And my finding was that the source material was pretty simplistic in many cases, and actually not. It was spitting back more often things that were not novel, but sort of more well-known material. I don't know if that has been your finding. I'm imagining that this is not going to be true. I'm always looking for that day when I look at something that I know and care about and say, wow, that's a really cool idea. I had not thought of that. Instead of getting back, yes, I know all that already. Yeah. I don't want, that's not what I'm looking for. I'm looking for something insightful. I'm looking for something new, not something that is a platitude,
trite.
Just something banal, which is what I think is often the case. But I also worry that I'm personally aware that if I start to see things that are novel and are new, are insightful, and way above my own pay grade, that I have to continue to be aware that I can't just trust it anyway, right? So I still have to go do my own work. I still have to verify it because there's been evidence of hallucination.
Yeah.
So that's an interesting area.
It may be one of the things that the real edgy stuff that you were hoping it could reference could be behind firewalls, and so it can't, or paywalls, and so I can't imagine. Maybe it does, but it's able to get articles from Journal of Finance or Journal of Finance and Quantitative Analysis. Those are things you pay for. If you ever try to get an article, you got to pay for them article by article. So it may be that it's not getting that. All that it can see is maybe some books, and books.
Take a look, by the way, at NVIDIA valuations right now, because I keep hearing these kinds of comments, and people are forever saying, valuations are out of control, and tech valuations are close to all-time highs. I already mentioned that, 85th percentile. They were higher in the tech bubble, but not many other times. And then they'll, at the same time that they say that, they will then say something about NVIDIA, and I'm always flummoxed by this because NVIDIA actually, at least the way we usually think about companies, is not hugely expensive. Now, I believe there is a law of large numbers, which means that their growth rate cannot be maintained, because if it was, geometrically, they would eventually swallow the whole economy. That's how big it is. We're talking about a $4.2 trillion company, but it's trading at less than 30 times forward earnings. And it's that's on an anticipated growth rate of 34%. So PEG ratio of like 0.8.
Yeah.
And monumental free cash flow, 56%.
Yeah.
Projected net income margins, post-tax.
Yeah. I think,
$150 billion worth of free cash flow is on the horizon. It's just $10 billion a month in free cash flow.
yeah.
It's almost unimaginable.
Yeah, I think people are nervous that at some point there'll be enough chips in play, and that the build out of these data centers um, is going to run its course, and they're going to have um, a big uh, a big spill on the downside. What I do think is interesting is we're seeing it
I think
being
it's more likely to get replaced.
yeah.
The technology gets replaced by quantum is what is my expectation. Not replaced, but that its importance is decremented once quantum comes online
It could
in a
be,
few years.
but we're building it out in the U.S., and so now Europe's finally starting to think about data centers and stuff like that and getting involved. Um, and the Middle East is starting to think about it because they're energy rich, so they can run these centers. We have, and of course, China is doing a lot. I don't hear anything about what Japan is doing, what other Asian countries are doing that are. I don't hear about anything happening in Latin America, and I don't
I
know.
don't think it is, but a lot's going on in China.
Yeah,
We
lots
know
of
that,
going on in
and
China.
it's gonna go on even faster now that they have. So they have the H20 is now going to be available for sale again
Yeah,
overseas in areas where it had previously been restricted. Some AMD
yeah.
chips
My
too.
my
On the H20 announcement, AMD popped significantly on that. That happened actually while I was in Las Vegas. I mentioned that because Finwest was just asking, Mike, what are some of the topics you spoke about in Vegas? And the topics that I addressed were there was a book. I've referenced it a couple times because I love the title as much as anything. I think his first name was Chris, last name was Cottle. Wrote a book called Options, Perception, and Deception. I was talking about options, perception, and deception, not on the same topics that he was, but about the impact of things that you don't normally think about in option valuation on the overall landscape. I'll give an example, and we were talking about it. When rates go down, you have a lower cost of capital potentially for businesses. You could see earnings rise. You could see the valuation turn, which is going to be related to rates, also increase. So that means you make more money and you get a higher turn on the money you make, which accelerates price appreciation for stocks. What was the point in bringing all of that up? My point was that it is a circumstance where overnight rates fall, and that lowers the value of calls, all else equal.
mhm.
But the most important thing for you to think about when you are trading options, what is the biggest and most important instantaneous financial exposure that you have? It's delta,
Yep.
right? And the change in rates has a carry-on effect for the value of the underlying asset. And we evaluated 2 million different potential trades over a course of a handful of years. And one of the things we found was that the probability of profit for calls actually, as rates fell, went up significantly. If you sold 80% probability of profit calls, 80 to 85% probability of profit calls in 2016, 2023, 2024, that was the years in the study that we examined, you actually lost money on average.
Yeah.
And why is that? Was it because the probability of profit wasn't that far off? It was a little bit overstated if you used implied, but the reason was because you had multiple expansion, earnings growth, capital appreciation for stocks.
Yeah.
What it meant was that you thought of interest rate sensitivity lowering the value of calls as rates went down, but the value of those calls went up because of delta. The carry-on effect of lowering rates was that stocks appreciated more quickly, and that impacted your delta. You need to lean long delta. So that was one of the topics I talked about. The other topic that I talked about was that it's not always zero sum in the options world. So Jane Street, Susquehanna, Citadel, Bluefin, where I used to work, what became Knight Capital, the gateway where I also used to work, engaged in things like dispersion trades, which are very crowded trades on the dealer side,
Hmm.
where they are selling index and buying constituent volatility. It doesn't mean that doing buy rights is a bad idea or selling covered calls is a bad idea. Doesn't mean you're not going to generate satisfactory risk-adjusted rates of return. These are different types of trades. So that was another point that I was making. So lean long deltas in general as a prevailing position.
Yeah.
I said this was the biggest mistake we made as market makers, in my view, back in the day. We were told very specifically not to take that type of risk. But it was absolutely ludicrous for us not to acknowledge that stocks rise over time. You know, how could you not lean long a little bit of delta? And the best example that I provided, I'm not going to name the hedge fund. People who are knowledgeable about this will know who it is I'm referring to. One of the most successful volatility hedge funds that I'm aware of between the late 1990s and the early teens had a remarkable track record. 22 to 23% average annual rates of return net of fees. And they didn't charge 2 and 20, by the way. They were like a 5 and 35 shop. So huge fees, huge returns net of fees. They only had one down year, and that down year was 2009, which is coming out of the GFC, the bottom in March. And that was their single worst month. In fact, they lost more in the month of March of 2009 than they did for the whole year. It was basically the worst month they've ever happened. What happened in 2009? The market hit its bottom and rocketed higher. And because they were not leaning long deltas, had they been, they would have been a lot better. Oh, we're going to get a hard shut off. I'm not sure from where, but apparently we're chewing up the clock. So
Okay.
I think our producer has got to run. So this has been a very loose conversation, but it's really good to have one with you, man, because it has been too long since we did one of these things, because I've been running all over hell's half acre.
Yeah.
But hopefully I'm going to be at my desk with greater regularity. So will you, and we'll be able to enjoy these things more frequently. So for all of you who tuned in for this rather loose but hopefully useful conversation, we appreciate your time and attention, and we hope you join us for the next one. Thank you very much for watching.
See ya. Okay. Jim White gave me a call.